This is an analysis from Alpha Business Media. Today, we're going to dissect one of the most significant, yet widely overlooked economic stories developing in South Asia. It's time to strategically reevaluate women's entrepreneurship in Nepal, to move beyond the familiar headlines and uncover what is, quite frankly, a massive and untapped investment frontier.
Right, let's just dive in with this statement because it really forms the core of our entire analysis. You see, this isn't a story about women trying to fit into an old, broken system. It's a story about them building an entirely new one from the ground up.
To really understand what's happening on the ground, we have to recognize that the current conversation is, well, it's trapped. It's stuck between two well-meaning but ultimately misleading narratives that completely miss the real story.
So on one hand, you've got the classic glass ceiling story, right? The one that celebrates a few women who make it to the top of traditional legacy corporations. The implication there is that success means assimilating into the old guard. And then on the other hand, you have the micro-enterprise narrative. Now this is important work, but it often romanticizes very small-scale projects, which subtly implies that female ambition should, stay small. The problem is, both of these stories are hiding the most dynamic economic force in the country.
Because the real story, the one we're focused on today, is the emergence of a sophisticated parallel economy. What we're seeing is a critical mass of women entrepreneurs who are not just finding ways around the old boys club, they're architecting a completely different kind of economy altogether.
So, what does this new economy actually look like? What makes it tick? Well, it operates on a fundamentally different set of principles than the legacy economy that we're all used to.
Okay, let's really break this down. The legacy, male-dominated economy, it's asset-heavy. Think factories, real estate, hydropower projects. It's incredibly capital-intensive, and let's be honest, it often relies on who you know, political connections. Now, this parallel economy is the exact opposite. It's asset-light. It's built on things like digital platforms, intellectual property, and strong communities. It's not capital-heavy, it's problem-heavy. And what that means is that it thrives by solving deep, persistent societal needs. It's collaborative, and its focus is shifted completely from physical assets to intellectual property and brand. And you can see this so clearly in the sectors where these businesses operate. They are targeting systematically undervalued but hugely important markets. In edtech, they're not building physical schools. They're creating digital learning platforms. In healthcare, they're focusing on preventative services, things like remote monitoring for the elderly or maternal wellness. These are high-empathy areas that legacy investors have just completely ignored. Make no mistake, these aren't small niches. These are scalable solutions to massive national problems.
And that brings us to the central conflict in this story. Because despite the proven resilience and the sheer ingenuity of these businesses, there is a shocking paradox that threatens to stifle this entire economic revolution before it can really take off.
Less than 3%. Just let that number sink in for a moment. These companies demonstrably have higher 5-year survival rates, and yet they receive a tiny, almost non-existent fraction of venture capital. So this isn't just a statistic. This is a catastrophic market failure, plain and simple.
And we have to be clear, this isn't just about a few biased individuals making bad calls. No, this is a systemic failure. It's driven by 3 interlocking problems that are baked right into the very structure of Nepal's capital markets.
Let's break these down. First, you have the VC mandate mismatch. Venture capital in Nepal has basically imported a Silicon Valley model. They're hunting for that 100x unicorn. But these women-led firms, they're built for sustainable, profitable 2 to 5x growth, not for reckless, burn-it-all blitzscaling. Second, there's the collateral trap. Banks demand physical assets, land, buildings, as collateral. These digital, asset-light businesses don't have them, and women historically don't own them. And finally, you've got network exclusion. In Nepal, the big deals are still closed in these informal, male-dominated brotherhood networks, which creates a kind of invisible tax on any female founder trying to get in the room.
Now, for a contrarian investor, this massive inefficiency isn't a problem to be solved out of charity. It is the single largest market arbitrage opportunity in Nepal today. Let's look at the strategic play here.
The core investment thesis is incredibly simple. It's arbitrage. In plain English, the market has put a much lower price tag on these businesses than what they are actually worth. This inefficiency creates a huge opportunity for a savvy investor to capitalize on that systemic undervaluation, to buy low on these incredibly high potential assets and see significant returns as they grow.
And look, this isn't just a theory. We've seen this playbook work across the region. In Bangladesh, bKash became a multi-billion-dollar giant simply by solving a deep problem for the unbanked population.
The parallel is crystal clear. These firms in Nepal are solving foundational national problems in health and education. And if you look at Bhutan's philosophy of gross national happiness, we learn that investing in these areas isn't just impact investing, it's a shrewd bet on the leading indicators of long-term economic stability and resilience.
So what's the actual play? It's to create financial products that are actually designed for these businesses. Think about things like resilience funds that value sustainable profitability over reckless growth. Or think about debt instruments that can accept recurring revenue and intellectual property as collateral instead of a building. The first movers who create these products will, without a doubt, define the next stage of Nepal's economy.
And all of this brings us to a strategic inflection point. Nepal is at a crossroads with two starkly different paths forward. And the choice that's made right now is going to define its economic future for decades to come.
Path 1 is stagnation by default. It's the easy path. If nothing changes, capital structures stay the same, these brilliant women-led firms hit a growth ceiling they can't break, and the parallel economy becomes a historical footnote. Nepal basically forfeits its best shot at a modern, digital-first economy. But then there's Path 2, catalytic growth. This requires deliberate action. A few pioneering funds create this new asset class. Their first successful raises signal a massive market shift, and this parallel economy begins to vitalize the mainstream, positioning Nepal as a genuine leader in inclusive innovation.
Let's be very clear. The market is not going to self-correct here. The inertia of the old system is just too strong. So the crucial point, and the final question we leave you with, is this. Will investors and policymakers continue to fund a pale imitation of the past? Or will they have the foresight to finance an authentic, resilient, and profoundly valuable vision of the future?